Yeah, thanks, Tim. And thank you very much, Share Cafe, for having me on the Hidden Gem section today. So Strike is not only just going to be a natural gas producer, and it's also going to then look to integrate that natural gas into Australia's largest source of its own domestic fertiliser, as well as integrating renewable energy through its geothermal assets in the Perth Basin. So if we could just jump forward. As you can see from this picture here, Strike's one of the most exciting investment opportunities in the energy space in Australia at the moment. And that's because over the past several years, we've compiled a series of assets where we have built a strategy by a world-class board and in a very confined and concentrated jurisdiction that can see the company worth multiples of its current valuation. And that comes off the back of discoveries of low-cost natural gas resources in an area of the Perth Basin that we like to call the Permian Gas Fairway, or in the far north where our West Arigala field sits. On top of that, we've also acquired some 3,500 square kilometres of the only geothermal rights in the Perth Basin, where we are quickly de-risking Australia's only baseload 24/7, 365 renewable asset. And we're looking to monetize some of our future volumes of natural gas through our fully integrated fertiliser development up in Geraldton, where we've been given 60 hectares of land by the state government here in Western Australia for a 1.4 million tonne urea fertiliser manufacturing facility. So as we move to the next slide here, what I like to call the Strike Complexogram. And this is this nested and integrated strategy, which is actually quite simplistic. When you move to the far left of this picture, you can see Strike's core competency really is in two fields, and that is in the identification, mapping and interrogation of Permian Kingia sand units of the Perth Basin, and then drilling holes into it. And if we drill holes into it, then it's the extraction of either the gas or the fluid in which sit inside those sand bodies. And that gives us a proliferation of opportunity. It's not just domestic gas, as you can see in the bottom arm of the development, where we will be looking to take FID on our maiden 87 terajoule a day development at West Arigala in the coming months, but also taking that natural gas, which is a major feedstock for cost competitive fertilizer, urea fertilizer at that, making hydrogen and ammonia, and then also distributing that fertilizer around Australia. But that core skill also allows us, through the mapping of Kingia sand units and drilling holes into it, to also interrogate and hopefully commercialize what we can see as up to 350 megawatts of zero carbon baseload dispatchable renewable geothermal energy. That could be done on industrial scale, and that could have the impact of actually removing a coal-fired power station from the West Australian economy. So that's quite a meaningful opportunity for us at this point. But moving forward and to the next slide, when you add all of this together, back to the, took my crescendo there away, back to net zero would be great. When you add all this together, the Strike strategy culminates in being net zero scope 1 and 2 by 2030. This is the most aggressive and ambitious net zero target of any energy manufacturing business in Australia. And it's something that we can do through our contemporary nature, our innovative use of our natural gas and green hydrogen sources into the fertiliser development, and the proliferation of geothermal energy in Western Australia. 2030 is held up as the benchmark by Fortescue as the yardstick for decarbonisation programs. We're looking to meet that. And we're also looking to do that from being an energy company, which often has a fairly high carbon footprint. As we move into our domestic gas business, the next slide now, and then we'll jump straight after that one. You can see where the nucleus of the value of the company currently sits. The company is currently trading on its domestic gas business value really only. What we have done is we've discovered a major conventional gas field, one of the largest conventional gas fields ever found onshore Australia in West Arigala. It was one of the deepest wells ever drilled. That field is now well appraised, and it's giving us the confidence to continue to explore into the Dandaragan Trough to the southeast, where you can see Strike's permits into South Arigala and into our other various opportunities. The North Perth Basin, between the discoveries of Waitsia, West Arigala and Bahara Deep, is putting together a very impressive track record of success, where all 15 penetrations of the Kingia sandstone to date have found commercial conventional quality reservoir, and 9 of the 8 deep wells drilled have been the foundation of conventional gas discoveries. So between ourselves, Beach and Mitsui, Rystad are currently estimating that up to 10 TCF of some of the lowest cost gas in the region would be discovered in this part of Australia. This would be gas on cost that would rival Qatar, Russia, and the US, and gives us a great opportunity to use that cost base to start to wrestle back some of the products that we've offshored into other manufacturing jurisdictions. Next slide, please. And you can see some of these results here. We've been drilling since September last year, and we're very pleased to point out that the West Arigala gas field has consistently supported strong commercial results. We've recently flow tested the West Arigala 4 well, which had a strong 35 million standard cubic feet a day flow rate with no depletion evidence on that 46-hour test. We did produce a small amount of fresh water, which was part of some of the discussions earlier in the week through various ASX announcements. And we're very confident that that water is actually being produced through a small perched water lens sitting against the Bitbasher shale, and is actually not diagnostic of a water contact in the field. We'll be able to prove that very soon in the perforations and the flow testing of the West Arigala 5 well, perforations should occur on Wednesday or Thursday of next week. And then we'll look to start flow testing West Arigala 5. We're looking for an equally strong commercial flow rate from that well, and that should give us the foundation to be able to move ahead with the resources and reserves required to be able to commercialize the phase 1 87 terajoule a day development. Moving ahead. You can see what this development looks like. It's actually quite prolific, and we'll see Strike rise to becoming one of the largest domestic gas producers in Western Australia by the end of the decade. While starting with 87 terajoules coming from the West Arigala gas field, we will look to monetize our Arigala complex, or the greater Arigala structure, to scale up our gas production to some 316, maximum of 316 terajoules a day, which is what the export pipeline is sized for, from the gas plant to the Dampier-to-Bunbury natural gas pipeline. Australian Gas Infrastructure Group will be building, owning and operating the gas plant, and we'll be providing the capital base for that large piece of infrastructure, and that will be underpinned by long-term gas sales contracts between ourselves and our partner with Wesfarmers and Alcoa. Moving to the next slide. But we recently told the market about a very transformational second half of the year that's coming up. And that's because we're about to take the confidence that we've had from the West Arigala appraisal campaign and start to move south. And you can see in this visualization of the 3D structures of the greater Arigala complex is that we're about to move into South Arigala, which is a very large regional high for the area. In fact, it's actually the top of the structure sits shallower than West Arigala. And we'll be putting a well into that in October of this year, where we believe that we can uncover a greater than a TCF of future recoverable gas resources. Even under the most conservative assessments of where the water contact at West Arigala lies, South Arigala still sits comfortably above that contact, and in fact would still be a very robust commercial gas resource, rivaling West Arigala in total size as well. Moving to the next slide. But our domestic gas business is actually improving in value every day. 2020 was a tumultuous year for domestic gas in WA, because it's been heavily reliant on investment from super majors and Australian oil and gas majors. What we saw last year were 3 major domestic gas projects delayed because of their parent companies' LNG projects being delayed. We saw Gorgon Phase 2, Scarborough and Browse ultimately be delayed or deferred. And that also then came in parallel with 165 PJs written off from Santos's domestic gas portfolio, where they are one of the largest domestic gas producers in the state. This lack of reserves replacement is coming as a looming mid-decade undersupply. And that is then compounded by the fact that domestic gas usage is on the rise. We're seeing APAs Northern Goldfields Interconnector pipeline connect the Perth Basin through the DBNGP across to the Goldfields, where we believe there's 120 terajoules a day of salient domestic gas demand that's about to come forward, as gold, copper, nickel, and iron ore producers all start to try and reduce their carbon intensity through the reduction of diesel-fired electricity and the increase in gas consumption. This has all come together as a confluence of events that has seen the domestic gas price rise to north of $5 on the spot market so far, and over 120% in just 12 months. Moving ahead. What are we going to do though if we uncover very large sources of natural gas in the second half of this year? Well, the Strike's board of directors decided that we would like to move ourselves down the value chain. And as we move to that next slide, you will see Project Haber is that aspiration. We have been received 60 hectares of land in the strategic industrial estate of the Narngulu area, which sits out the back of Geraldton and is connected to the Geraldton Deepwater Port, the state's rail and road infrastructure, as well as having a nearby airport. Project Haber is a 1.4 million tonne urea development production facility, which will see the large proportion of Australia's imported fertiliser displaced with domestic sources. We'll be able to get our own agricultural critical commodity supply source coming from this development. It will displace more than $1 billion of imports, over what 10% comes out of China. It will not only reduce the cost, structurally reduce the cost of broadacre farming in Australia, but it will also have a meaningful reduction on the carbon intensity of our farming and our urea consumption. And it will see the integration of some of the first green hydrogen into a dedicated fertiliser development, and we'll be leading that charge right here in Western Australia. We've had ACIL Allen, a highly reputable economic modelling agency, conduct our economic impact assessment for us. And in good news for Australia, this project will develop some $8.4 billion of GDP, will develop 1,500 jobs for 3 years of construction in the mid part of the decade, and will create 300 full-time jobs for 30 years in the Midwest region. It will see the Midwest economy grow at an accelerated rate of 3.8% per annum as a result of the size of this development. And that's all comes off the back of low-cost, affordable natural gas, which we can integrate as we move to the next slide with the region's vast 900 megawatts of renewable infrastructure that currently sits producing negative to zero price electricity in the evening. And that's because the Midwest wind continues to blow, and unfortunately there's not industrial electricity demand at that end of the Southwest interconnected system, which the Midwest is connected to. And so we're looking to not only use the wind and solar infrastructure in the Midwest, which generates very low cost power, to create 2% of our hydrogen feedstock as green hydrogen, and therefore integrating into our overall fertilizer development as being one of the only sources in the world of green fertilizer, but also the green hydrogen developments of our peers in the immediate region. We've seen ATCO receive ARENA funding for their development of their Clean Energy Innovation Park at the Badgingarra Wind Farm. We have BP developing a green hydrogen source right next door to Project Haber, and there are other various proponents in the area. And as we move to that next slide, you can actually see when you start to add up a lot of these impacts between the domestication of our supply chain, the use of modern ammonia manufacturing technology, clean Perth Basin natural gas, and 2% green hydrogen, we can actually start to reduce the carbon intensity of the urea consumed on our broadacre farms throughout Australia by 50% per tonne that we supply. And as we start to aspire to put up to 20% of green hydrogen into the plant, we can actually reduce that down a further 11%, down to 60% reduction in carbon intensity. And that is, when you start to add all of this together, you can see the meaningful impact that Project Haber can have on the fertilizer footprint and carbon footprint of Australia. We've got some really exciting developments occurring. We've got pre-feed completing in September with potentially the announcement of an additional technology choice, which could further enhance the carbon reduction of this fertilizer. Our second round of offtake for the project completes today, and we're expecting strong feedback from a lot of the industrial urea distributors and traders that have been involved in the project to date. And we've got strong interest from a lot of those off-takers for potential equity participation or even role as operator. Moving to the next slide. But that's, like a good Demtel advert, there's still steak knives to come. So as we jump through our Midwest geothermal power project, this was almost by accident that we stumbled into realizing that our gas assets were actually co-located with what we can see is up to 350 megawatts of zero carbon energy. It took a fat-fingered reservoir engineer who accidentally converted their reservoir model from a gas permeability to a water permeability that made our eyes stand out on stalks. We realized that the Kingia sandstones, these deep Permian permeable sandstones that sit at great depth, in a sufficient depth to have a strong geothermal gradient, are actually host to water resources if you drill off the gas-bearing structures. We believe that you could free flow one of these wells at 13,000 barrels a day of water at greater than 150 degrees or so, which would give us the basis to produce some of Australia's only base load renewable power. Now, we've got 3,500 square kilometres of this acreage. We own 100% of the geothermal rights in the basin, and we will be the frontier and front runner of this exciting geologically driven technical development. We've just had the West Arigala 4 flow test, and as we move to the next slide, occur, and that West Arigala 4 flow test produced a little bit of water to surface. That water was sufficiently hot enough in its very small quantity to heat our wellhead at West Arigala 4 up to 115 degrees. Now, there was predominantly gas flowing through that well, and gas is a poor thermal conductor. That small amount of water was sufficiently hot enough to bring the wellhead to a point in time where we believe that we've slightly de-risked the geothermal play. Now, as we add our geothermal aspirations together, along with our fertilizer development and our domestic gas business, you can see a very deliberate and thought out pathway to being net zero 2030, certainly in scope 1. And if we can aspire to industrial scale geothermal electricity, we're going to chip away at our scope 3 as well. That's something that no one is tackling in Australia to date, and would really put Strike out in the forefront as being one of the most carbon conscious, zero carbon natural gas, fertilizer and electricity producers in the country. So when you add that all together, that's a very ambitious plan, but we're starting to chip away at it every day. And I'm really excited to see the developments that have occurred this year. We've bolstered the team. We've recently brought in some new executives out of Wesfarmers to help us realize our aspirations. We've raised the best part of $100 million in new capital, and we're just about to take FID on our maiden gas project, which will see first free cash flows delivered into the business in early 2023. So in regards to all of that, that would be the end of it. Thanks, Tim.
Thanks, Stuart. A lot to get through there, so thanks for your time. You've had a couple of announcements this week. Originally, there was a kind of a difference of opinion, if you like, on with your JV partner, Warrego Energy, on the significance of water in some of your test results. Can you give us a better understanding of where does that interpretation between the parties now rest?
Yeah, look, I'd like to think I'm a fairly reasonable person, Tim. I'll always compromise in negotiations on time frames and on developments and things like that. But what I will never compromise on is technical fundamentals. Technical fundamentals are the basis of our core competency, in which the strategy that I've just rolled out in front of you. Ultimately, Strike couldn't piece together how the production of very fresh water, small quantities of water that was seen to decline during the West Arigala 4 flow test were the indications of a field-wide gas-water contact. Now, this was not a interpretation shared by our joint venture partner, and unfortunately, at that point in time, it resulted in differences of opinion and different announcements at the start of this week. We have also published new information today, which shows just the coherent and consistent application of the regional data, the data from the play, the analog fields of Waitsia and Bahara, and how we've come to our technical conclusion. And ultimately, the proof will be in the pudding next week when we perforate West Arigala 5 and flow test that well.
And a technical question here, if we've got an oil and gas analyst online. If the 100% owned South Arigala well is successful, could it leapfrog West Arigala development?
Between ourselves and our joint venture partner, we've committed to the long lead items of the West Arigala phase 1 development. So that development, you know, given the gas is sold to both Alcoa and to Wesfarmers, and we've made such great progress in the last year and a half, there would be not a good use of the company's time and energy. However, I definitely could see, given how long it's taken to get that first piece of the puzzle together, that the South Arigala development could be the basis of the scaling up of our domestic gas production in Western Australia.
And just finally, you spoke about the increased gas demands, and obviously funding in this sector from an environmental ESG principle is perhaps potentially lacking in the future. How do you see this whole cycle playing out at the moment for a gas company like Strike?
So the use of gas in Western Australia is actually supporting the proliferation of more renewable energy. Gas provides a good feedstock for dispatchable instantaneous energy for when the wind's not blowing or the sun's not shining. So in partnership with renewables, we see it as a valuable energy source as we start to transition into new forms of energy or energy storage to get and help those costs come down. Natural gas is also a big part of our hydrogen aspirations. Unfortunately, you can't make globally competitive fertilizer right now just on green hydrogen. You may be able to do that in the future. And that's exactly why we're using our natural gas at the moment to help us build the infrastructure of that 1.4 million tonne fertilizer development, which will position Strike very positively as that transition starts to occur, as green hydrogen becomes cheaper and we can start to displace our natural gas with more green hydrogen and ultimately make pure green fertilizer. So really, gas is a great transition fuel. We're seeing still very positive supporting from debt institutions like Australian retail banks and international investment banks. And also the equity markets continue to be supportive if you can show a logical pathway to a net zero, a net zero pathway. And I think Strike has one of the most credible and honest approaches to that. It's very contingent on some project success, but it is exactly how we see the strategy rolling out, and it's our commitment to our shareholders. It's such a commitment that I've actually linked 30% of my bonus remuneration to achieving that net zero target and progress year on year to it.